Hey everybody, how you doing? Brad Haberlin, Legacy Mortgage Group. I've been encountering a lot of real estate agents and buyers at open houses that we've been doing lately, and there's been one common question that seems to be coming to light, and that question is, why are mortgage brokers' rates so much better than mortgage bankers' rates? I was on both sides. I was on the banking side for about 10 years, so I know the specifics of this, seeing it now from the broker side. One of the top producers at one of the old companies I used to work for always had a line when I heard him pitching to clients that all the money comes from the same place. And I never really understood what that meant until I started learning the ins and outs of the back end of the process. And it's true, money, all the money does come from the same place. So I'm going to explain to you how that matters, right? So here you have mortgage banks, and here on the bottom you have mortgage brokers. Here's the money coming from the starting point. So the money starts from here, and now you have the mortgage banks, processors. We have two processors on salary. Any mortgage bank is going to have anywhere between 4 or 12 plus processors depending on their size. Underwriters. We don't underwrite. So our investors underwrite, which is good for a few different reasons. One of the biggest reasons is, there's they're talking about a few rate drops this year. So during the last refi boom, when I was in a mortgage bank, our turn times went to 16, 17, 18 days, which is a nightmare, because now real estate agents, their purchase business suffers because they're trying to underwrite all these refinances. Everybody I knew that was on the broker side, their turn times never hit higher than 3 or 4 days, because these huge servicers have thousands of employees. They can handle the volume no problem. So we don't have the underwriters. That's like I said, it's a benefit in multiple factors. And a mortgage bank is going to have anywhere between 5, 10 plus underwriters, again depending on the size. Closers, we don't have closers. The investors do that as well. So any mortgage bank's can have anywhere from 1 to 3 plus closers. We don't have any. HR department, they have to have an HR department. We do not have an HR department. All of our stuff is internal. IT department, same thing. They have a big IT department because they have huge systems uses, and our IT is built into our systems on the broker side, our point of sale systems, our loan operating systems, and we have some back end support inside the office that accounts for one of our salaries already. Rent. These are huge offices for these big mortgage banks, anywhere between $8,000, $20,000 plus a month for their rentals for the office space. We own our office, our mortgages with everything in about $2,500 a month. And then at the other end of it, you're going to have all the advertising and the system uses. We both have those, but on the banking side, you're going to have a lot more advertising expense, MSAs. We were in some MSAs with Keller Williams where we were paying probably $20,000 a month. Stuff like that. That all matters. So at the end, all of that overhead comes at a cost. So if we're both getting the money from here, and you have to bake in all this margin to be profitable as a company, that's going to get passed on to the borrower, and that's going to get passed on through the rate. So give us a call today if you want a competitive rate quote, and we'd be happy to help you. Thank you.